Okay, so in the last class we had looked at we were introducing ourselves to market structure, and then we started from looking at highs and lows, and then which would now be support and resistance. Then in teaching support and resistance, I taught two things, which I said were um, two types of support and resistance, which I said were horizontal support and resistance, number one, then uh, the diagonal support and resistance, which you can still see on my screen. Okay, so we have that, and then we talked about trend. I explained trend, and I said that uh, trend is basically just the direction of the market. The trend will either go up or down. Okay, so the market can either trend upwards or downwards. Okay, now depending on the trend, what we have basically is we have what would have market do mostly is either it's buying or it's selling. Then at intervals, the market would either now range. Okay, the market will just play for a while, then it can continue. For instance, look at my screen. This is GBP It has been um buying for a while, and then it got to this point. From this point where uh you can see my cursor right going across the screen, right?
Yes, sir. Yes, sir.
So from this point, you can see a lot of, it's not either not going up or going down like that, but shown some signal more like the movement towards again. Okay, so um after the range, what happened here is you can see this is a low, this is a low, this is a low, which is called a support. Okay, usually what
Yes.
you sometimes could be a false break. Okay, let me show you some.
Okay, sir.
So this is like a range. Okay, it's like a range where the market has been before. Let me take it up a bit. Yes, so this is like a range where the market had been before, and then now you can see that it came under it, and then it has gone up, it has gone back to that place. So this could be a false break, so that some persons will feel like the market wants to sell and enter sell, then it may continue going back up again. But in all, this is an upward trend if you look at it this way. But the market has been along this area for a while. Okay, so that said, talked about trend, and I said for a trend to be established, you either see two things: you see pullbacks or retracements. That was where we ended our last class: pullbacks or retracement. So before we go to that topic of pullback, retracements, and reversals, let me now go back to something I said I missed the last time, which is the last type of support and resistance that I didn't teach, but I mentioned. It's called dynamic support and resistance. Dynamic support and resistance is uh, support and resistance levels that we get using dynamic instruments, what we call indicators. Okay, indicators.
Okay, sir.
So the reason it's called dynamic is because it is not just one thing that used to determine it, not one indicator. Okay, so there are a number of indicators that you could use, and then what we use them to do is just form support and resistance. Okay, to see support and resistance, some of them may show you other things in the market, like the volume in the market. Some of them will show you volatility. For instance, what I have on my screen down here is volume. Let me show you. If I right click now, you see volume here. If I tick on it, that's gone out. Okay, so you see that volume line comes up or shoots out mostly, well, it's not coming out again, mostly when there is volatility, when there's movement in the market. Okay, like that's when that will happen. Okay, so let me now show you dynamic support and resistance. Let's use first example, let's use moving average. Okay, moving average.
Yes, sir.
I will not teach indicators in this session. The only thing I will take is just moving average, okay? And there's a reason I want to talk
Okay,
about
sir.
moving average, basically because of how it helps us make certain decisions most times, okay? So let me introduce you to moving average and how that can be a support or a resistance tool for us, okay? So to put moving average, what you could do is you could come here, click on insert, you will see indicators, okay? Indicators, you go to trend indicators, and then you see moving average. Moving average. So now depends. A different kind of moving average, okay? Sorry, the different settings you could use to your moving average. First is period. Period will mean um let me even explain the idea of moving average. You know, price is moving per time. So
Yes,
moving
sir.
average is just the average of price movement per time. When we say per time, now we will now mean per we're measuring time. The unit measurement of time on a chart is these candles that you can see. So if this is a 1 hour or this is a 4 hours chart, it will mean that every it will mean that the time in this chart is calculated in four hours. Okay, so if we now say period, like you can see on my chart, if you say period, you can see here they say period 10. If we say period here, it will mean that you are looking at 10 candles. Okay, 10 candles.
Okay.
You get
Okay.
so moving average, if you
Mm.
now say whatever moving average, if you now say uh for period, I will say 10, it means that they are giving you the average price for for 10 candles. Okay, that's what it means.
Yeah.
Next thing will now be for the method. Method will now be let me just say type of moving average. That will now be either it's a simple moving average or it's exponential moving average or smoothed moving average or linear weighted moving average. Okay, so
Yes.
depends on which one is more accurate for your analysis. Okay, but for this one,
Yeah.
let's just use let's say exponential moving average. Okay, now
Okay.
you can now decide to apply it to either the close of the candle or the or the open of the candle or the high or the low of the candle or the median price. Okay, let me explain
Okay.
this. um um Close will mean if you look at a candle now, the candle will close at a point now, at a price level now, right? So if you're
Yes, sir.
at close, it means that you're setting the candle to how do I put it? You're setting the candle uh to give you the average for the close of all the candles for that period. Okay, let me give you an example. Let me close this. Let me give you a clue here. Who's in this class with me?
Yes, sir. No, sir.
I noticed that I had done that setting for everybody to be able to join, but I'm noticing that I still have to admit people in the class, and I really didn't want that distraction. Okay, share again. Okay, so let's continue. Um, Now I want to show you something. So let's look at certain things. Okay, look at this long candle here. Can you see this candle?
Yes, sir. Can say it.
The buy candle. This is where it started from. Okay,
Yes.
let me use my crosshair.
Mm.
Why not? Ah, my chat is not responding. Let me close this. My chat is not responding. Okay, but you can see where my cursor is, right?
Yes, I can see it, sir.
It's where the price opened here for this candle, and then this is where the price closed here. Okay,
Yeah.
this candle.
Yes, sir.
It means that if we're taking average for or for close, sorry, this is the price they are going to take for this candle. Okay, the next candle opened
Okay.
and closed there. This is the price they are going to take. Add the two of them and give you the medium. This candle opened here, closed here. This is the next price they are going to take. Okay, so the level that moving average shows you is the average movement of price for period. Okay, now let me
Yes, sir.
explain something to you for you to understand. Price most times will always correct towards moving average. I'm going to show you now. Price will mostly correct to moving average. That's why we now use moving average sometimes as support, mostly as support. Then also higher moving average sometimes could be resistance. Okay, so
Okay,
that's
sir.
what it means.
Okay, sir. So what of trend? Does a moving average can indicate a trend to show us a trend?
Of course, let me put one now and now show you what it means. Okay, how you can use that to say, okay, this is the trend because of moving average. Okay, so
All right.
go back to insert. Why is this thing not showing again now? Something is, I have to close certain things on this my screen. Let me stop share first. I'm coming, eh?
Right. All right, sir.
There's a lot of things that I should just close. Yes. By the way, are you people watching this my videos on YouTube? I doubt it though.
I watch it.
This is the reason why I couldn't do anything. This is the reason. That's this thing I wanted to open down. So we'll go to insert. Okay. Let me share my screen again. See the reason that thing was not. Okay, let's come back. Yeah. Okay, so let's see. Let's put it moving average. So indicator, trend indicator, moving average. We have moving average 10 here, okay? I said let's use
All right, sir.
exponential and then let's apply to close, okay? The close price for all times. And then let's use red, okay?
All
Um,
right.
let's use red for that. Let me make the line thick so that it will be obvious. So let's click OK. We'll click OK. You will see something here. Okay. Um, that's one. Let's put another one. Let's put let's put 13. I just want to show you certain things. So it depends on whatever setting
Okay.
you want to use. I'm not very big on moving average, okay? So let's set that as yellow. Okay, not quite much. Let's take it out. Let's take this one out. Let's take that out. Delete indicator. So let's put 5. Okay. I will be content in every circumstance. You are trying. You're enough. Let's make this one blue. Okay. And then let's set 20. People usually set, you see some who set 50. Let's see. Let me just put 20, okay? 20 and make that white. Okay, now let me show you something here. I'll go to other time frames to try and explain or show you more. On different time frames, mind you, this moving average will show different things. But see how
All right.
these prices are moving, are just staying very close to the moving average. You get? Now, when there's an impulse move, price will move away from the moving average. And there's an impulse move, price will move away from the moving average. Okay? Then after a while, it will find its way back to the moving average. Okay? See here now, this
Okay.
point where the price is going up from all this side now, at this point, it would have left all the moving average behind. Then when it started delaying here, the moving average will be coming to meet it, to the point where the moving average lines are touching the candles. The market is rallying that time. When the price wants to move again now in this buy, you see that it will push away from moving average, and then the moving average will start chasing it up again to go and meet it, or the price itself will come down to come and meet the moving average. Let me use let me see. I'm not getting a clear picture to show you what I want to show because I'm looking to, let me go to somewhere else and see if I can put, this market has been ranging. So if I put moving average, it's going to just be in the middle of the things. Let me look for where there is serious. Okay, let's use this one. You can see moving average here, right?
Yes, sir.
Let me make this candle. You can see moving average here. Now, see how price was here. How you want to use moving average to know a trend is that when moving average comes under the candles, when moving average comes under the candles and starts following it up, like what happens is that when pullbacks happen, it will come back to the moving average. See here, pullback came to the moving average, went, touched, went to, came back to the moving average line, went up again, came back to moving average, played around the moving average, came under it, went up again. You can say that's an upward trend when the moving average is under it. Now, when the moving average now
Okay, sir.
turns and goes above the candles, you can see that the candles are going down at that point. See here, for example, where my screen, where my cursor is now, you see that price came under and then it went dead like that. For that time, the price was going down. So you use moving average to determine the trend when the moving average has finally settled under. In this case, where I
Okay.
put 3 moving averages, you will notice that the smallest moving average is the first to meet the candle, followed by the medium one, then the largest one. So this blue one here is 5, this one is 10, this is 20. When you know, to know that the trend is forming well, all the moving average lines will form in order from the smallest to the highest. You understand? Like from here now, where the
Okay,
price
sir.
is going up, you will see that it formed 5, 10, 20. Yeah. When it's coming down, at this
Yeah.
point, all the candles crossed. Sometimes
Yeah.
people use this thing as their strategy. When all the candles are crossed, they will now say, okay, it's safe to sell that time. And they now sell. That's not a strategy that I would encourage anybody to use, okay? So, like here, it
Okay.
has crossed again, and then you can see that the price is going up, okay? So, basically, that is what we have as like moving average. So we use moving average most times to become support and resistance. This moving average is not clear. Maybe I should use something else. Let me change the style. Okay, properties. Let me make it smoothed if it's going to change uh how it looks. Okay, or let me make that linear weighted. If it's going to help us I don't really use them much. If it's going to help us, it's helping me, but I don't know. It's not giving me the right things to explain the things I want to explain. I like that smoothed one, the way it came down. Let's see. Let's use the smoothed. Okay. So let's use smoothed for 10. Good. And then so now you can see that when price went here, price at this point, price has gone up to this high. When it came to form a higher low, it came to moving average 10 here. It was moving average 10, it tested. So this moving average 10 here now is now like the support for it before it went back up again. Came to 10, tested it, came to 10, tested it, went back up, came to 5. Okay, let me change this 5 to the smoothed 2. Let me change smoothed 2 and see. Good. So it came to 5 here, tested it, rallied around 5. At this point that it is rallying, you can see that all the moving average has now come to meet it. From here, this 20 has never met it before. But because of the length of time it has stayed, the average of the candles they are calculating has made it come and meet it here. And then it is playing around here now. Do you get? So
Yes, sir.
that's what moving average is. And then you could use it as support and resistance. Okay, you can use it as support and
Okay, sir.
resistance for as dynamic support and resistance. Okay, so let's
Okay,
go
sir.
back to okay, there are other indicators you could use as support and resistance. Another one could be, I want to take this out. Okay, um
Okay, sir.
another one could be Bollinger Bands. Bollinger Bands are usually used to as support and resistance too. Let me put one inside and show you. I won't do any settings for that. Oscillators. So where's Bollinger Band? It's not here. Okay. B. Williams. Bollinger, where are you? Oh, trend indicator, Bollinger Band. So let's just leave it the settings that it is here, period 20. Let's just leave it like that. You can see the 3 lines, right?
Yes,
3
sir.
appeared. Let me make them bold. See the 3 green lines that appeared. One
Yeah.
up, one in the middle, and one below. This middle one
Yes,
now
sir.
is more like the uh, moving average. This upper one now is now the resistance, and the one down is now support. Okay. So when there's a
Okay,
movement,
sir.
you can see the price is moving above around, touching the resistance. Then it came down to the lower Bollinger Band as the support and went up to the upper Bollinger Band. You understand here? After a while, it came down to the middle Bollinger Band as support, middle Bollinger Band as support here. Then it went uh, above up here. Okay, so basically that's how people use this one, Bollinger Band. They could use it as both support and resistance. Now you can see here, it is playing around. It came here to the, when the market is ranging, usually it will range around the Bollinger Band. The top one will be support, resistance, but bottom one will be support. That's what you can see here. Then when an impulse move on to start, let's say this thing wants to sell, you will just see that the Bollinger Band will now expand its mouth. This one would open, and then the price will just be following it, following it. Sometimes it will break it, you understand? And then to be following it. When price breaks it, there is some momentum, okay? See here, when price broke it, there's momentum. It came like that and came down. Okay, so as it's going now, This middle, this is like the first resistance it will meet. It stays there and breaks it, then this is the next resistance, okay? That's how to use Bollinger Band as a support or a resistance, okay? That's how to use it as support or resistance. That said, let's now go back to our trend gist. I mentioned that for trend, I want to take this Bollinger Band off now. That's the last example I'll give you for dynamic support and resistance, okay? So let's discuss pullbacks, retracements, and reversals. In last class, I told you that pullbacks are corrections in the market when there is a movement in a particular direction. That there are some pullbacks there are some pullbacks that occur. Pullbacks are candles that are moving in the opposite direction. Take for instance, from down here that you can see, price is moving upward. Then every sell candle you can see is a pullback. Okay, so price will pull back a little to form a level that establishes the trend. And I said for buy trend, it will form higher highs and higher lows. So it has come here to form higher high, that is this high that is higher than this one. It has come here to form a low that is higher than this one. This is a pullback. That higher high, higher low, higher high, higher low. The lows there are the pullbacks, okay, that you can see. If it's a sell where you have lower highs, lower low, lower highs, let me see, did I give any example? The opposite of this, the pullback towards the buy would now be the movement towards the buy for a sell will be the pullbacks, okay? So in this case, this is a pullback. Let me, I'm coming. In this case, I'm drawing nonsense. Oh, properties. Um, no, no, not I'm doing. This place here, this is, in short, let me use this thing to show you. This whole place here is a pullback, okay? From here now to this point. Market is a pullback at that point, okay? So that's what you call pullbacks, okay? Now, this is another one here. This is another one here, pullback, okay? This is another one here,
Yes, sir.
from here to here. So that's a pullback. The difference between pullback and retracements now is that retracements are longer corrections in the market. Longer corrections. How do I mean? Let me look for an
Hello,
example.
sir. Please, can you repeat that? The difference between retracement and pullback.
I said retracements are longer corrections. Longer.
Okay.
But let me go and
Okay.
I want to give you an example to say why I called it longer corrections, okay? Coming. Let's see. USD GPUSD. Okay. I'm coming. If I don't see a good example, I'm going to use what I saw. Okay, let's use GPUSD. Now, you can see this channel I drew here, right? Where this market
Yes,
is
sir.
up. So let's call this a buy trend. Let this first channel here, let's just use this one first. Now you can see that in this case, it's good to mark your chart to see. For instance, see this line we drew last week here, where as horizontal support and resistance here and here. You can see that today's low where the market came down, it is that line it came to test and went back above it and went up, okay? So that's one of the advantages of marking your charts. Now, let's call this, all these things pullbacks, okay? It went up, pull back, went up, pull back, went up, pull back, went up, pull back. These are the lows that are formed, higher low, higher low, higher low, higher low. But you can see that it now came down here and formed a low that is now lower than this thing, lower than this one, this one, this one, and the same level with this one, right? This low
Yes, sir. Yes.
is lower than this low, this low, this low, but the same level with this
Yes.
one. But the next move now went up, upper again to form higher high. You see this thing that came down here, so this is a retracement.
Yes, sir. Okay.
Because it broke that structure of the higher high, higher low, higher low, that you understand that was formed there. So this is called a retracement, okay?
Okay, sir.
This is a retracement. So that's what retracement is. There are longer pullbacks that breaks the law of the higher high, higher low, lower highs, lower lows, okay? And then
Yeah.
so when you see that, you know that, okay, this has happened. How to trade with retracement? Usually, there's one tool that you could learn. That's a course on its own. You can go and watch videos on that on YouTube. You get a lot of videos. It's called Fibonacci, okay? You can use Fibonacci to
Okay, sir.
study retracement ratios, okay? You could use Fibonacci as a good trend progression, trend trading tool, or a trend reversal tool. Okay, you can use all of those like that now. But let's now go on. The last is now reversal. Reversal is the complete opposite. More like price was going up, now it has started going down. The trend was buy before, now the trend is sell. That's a reversal, okay? That's
Yes,
that
sir.
basic example. So that'll be all I want to teach today. From tomorrow, I'll go into some other advanced talk like that. Do you have any question before we end this class?
Yeah. Yes, sir. Now between retracement and pullback. Now let's say the market is trending up. So now, at what point will we be able to understand if it's a complete reversal from an uptrend to a downtrend?
Let me not. Usually, what your business is in the market is just to follow what you can see. Okay, follow what you can see. When we start doing analysis to trade, I will show you certain things. Why most times we do not want to be in a haste to say the market has reversed, because per time it is with different time frames you are trading. Okay, and then that your 1 hour time frame is just small compared to a daily or week time frame, which is now the real trend of the market. Okay, so it's good that we just stay focused with the last move that we are seeing in the market.
Hello, sir. Hello, sir. Can you hear me?
Yes.
I will ask you a question let's say the market is an uptrend. So now at what point will we be able to know that if
I have
that
asked